So welcome to RANsquawk's EU morning briefing for Friday the 22nd of May. Obviously much of the attention is still ongoing from that latest Standard & Poor's announcement from the rating agency firm in regards to the UK. The sentiment in the US session and how that closed was very much on cautious trade and quite a lot of fear in terms of the next potentiality of the US being commented on by S&P or Fitch or Moody's. That did weigh on prices in terms of stocks finishing lower. The Dow and Spoo's around 1.5%, and also with Treasury prices weighed upon, allied to the announcement of just over 100 billion worth of supply for next week, allied as well to a pretty poor or less aggressive in the reverse buyback from the coupon purchase from the Fed. In particular as well, which did get some attention and weigh on prices, especially in the equities for the Wall Street close, was PIMCO's gross. He noted that the US to eventually lose its AAA, although he doesn't see it being immediately. He also paid note to the debt situation in both the US and the UK to being twin-like, and obviously, again, prompting more cautious trade. Elsewhere, taking a look at some other headlines, a couple of Fed officials speaking overnight. In particular, Plosser said the chances of US defaulting on its debt seems remote, obviously, in response to the latest comments that we have seen. And elsewhere, he said the economy not ready for an increase in Fed fund rates, but would have to hike at some point. So quite interesting to see them looking further into their potential exit strategies. Also, Rosengreen from the Fed said the US economy may start to grow again by the end of the year, and he also stressed that any recovery, though, would likely be slow. Obviously, pretty much fitting in tandem with those latest forecasts we saw in the FOMC minutes earlier in the week. Just taking a look at some other news, stocks-wise, quite interesting to note for General Motors, a Washington Post article stating that the Treasury would steer GM into bankruptcy next week. However, Reuters sources do deny that and say that the government will come to some sort of restructuring plan. And elsewhere, going back to the UK markets, a couple of interesting comments from BOE members saying, firstly, from Charles Bean, who is the Deputy Governor, that the Bank of England faces a tricky call in deciding how to tighten monetary policy as the economy recovers and would not rush into hefty gilt sales. He also said that the Bank of England did not have to sell back what could be that 125 billion, the total amount of the QE programme, and asset purchases before actually raising rates again. Elsewhere, Blanchflower, in his usual downbeat, again today is pretty much, well, next week will be his last week of his term, being relatively dovish, saying UK unemployment will rise by 1 million or more. He did, however, say that we're 3/4 of the way through the recession and there are some signs of green shoots. Other than that, today there's no major US data, and the schedule and liquidity is likely to be thin, given that the UK and the US will be on bank holiday on Monday. So again, I expect much of the attention will be on any more of these rating agency comments, and also to see the direction of stocks and whether they can sustain their gains at the moment, or will we see a proceeding sell-off going into the extended holiday weekend.